Hi, good morning, everyone. Today marks the final day of 2025. I would like to thank everyone for the dedication and consistency in joining our morning kappa. Well done to all. Before we begin, I would like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes and does not constitute an invitation or recommendation to buy or sell any financial instruments. Please consult your licensed broker or financial advisor before making any trading decision. Let us start. Well, FCPO prices came under some pressure after falling to break above the 4,100 level. The pullback remained mild, with prices still trading within a narrow 40 points range. We continue to anticipate a rebound towards the 4130 region. As for FKLI remained firm on the upside, the market has taken a brief pause over the past 2 days, and whether it can reach a 1,007 level today remain to be seen. The Hang Seng Index is showing resilience around 25,900 level, currently at a crossroad as it decides its next direction. It may retest support once more, so this market remain on our watch list for further observation. As for XGS A50 is hovering near the top of its consolidation range. If prices fail to hold above 15,300, downside risk may emerge. For the US market, Dow Jones, S&P 500, and NASDAQ, I do not have any immediate buying plan, even as indices continue to push towards record highs. I prefer to stay patient and wait for a correction before considering any trading opportunity. The Dow, in particular, is showing sign of upside exhaustion and is worth keeping in your watch list. The Nikkei has surged strongly since April this year. The market is currently taking a breather and may still see further upside if 50,533 support level continue to hold. Well, corn futures remain under pressure with prices facing minor resistance around 441.0. However, it is advisable to wait for confirmation before taking action. Soybean oil is displaying positive upside momentum and traders may begin monitoring key support levels. And soybean is at the junction of whether it is able to support for an upside. Gold and silver saw a sharp pullback on Monday after a series of consecutive gains. Both metals may enter a consolidation phase before making their next move. Copper continues to grind higher and appears to be positioning itself for potential breakout to a new record highs. And for crude oil, it's finding its support and is attempting a rebound towards the 60 level. That said, the recovery may not be smooth as several minor resistance level lies ahead. Overall, we still anticipate further rebound potential. Malaysian palm oil ended a 4-day winning strike on Monday, pressured by elevated stockpile level, though losses were limited by anticipated production declines and stronger demand prospects. Prices may continue to rebound with immediate resistance near 4130. And as for US market, stocks slipped in quiet trading on Wall Street Monday to kick off another holiday shortened week. The losses have little impact on the broader annual gains for major indexes as they close out their final days of the year. There are 2 trading days left before the year ends. Market in the US will be closed Thursday for the New Year holiday. WTI crude oil futures slipped to 57.7 per barrel on Tuesday, but held on to most of the Monday's gain amid heightened geopolitical risk. Venezuela reportedly began shutting wells in a key oil-rich region amid a U.S. blockade aimed at financially pressuring the country. Well, last week we initiated a position in WTI crude oil, and this will be the follow-up call. We are now monitoring the trade for potential gain, with the first potential target at 58.9 and the second at 60.5. Well, since we already anticipate on the upside, to protect the potential profit, we are adjusting our potential loss level to 57.54 today. So biofuel dynamics is playing a growing role. New analysis highlight that soybean oil and palm oil price relationship have diverged significantly, driven by evolving biofuel demand and policies. This could affect soybean oil pricing and volatility going forward. Well, global soybean trade flows, especially involving China, remain a key influence on broader soybean markets, which indirectly impact soybean oil sentiment. Strong soybean demand and supply shift can influence processing and crush activity. And therefore, we have a second call. And therefore, we have a second call on soybean oil. We are at a reference price of 49.46 with a potential profit price at 50.16, 51.78, 52.89 with a potential loss price below 49. This call has been initiated yesterday on the 30th of December. The investment of this call, initial investment is 2,000 USD and the potential profit gain is 420 USD, 1,392 USD, and 2,058. And the potential loss price would be around below USD 276. So today marked the final day. I thank you everyone for joining Morning Kappa, and I hope that you guys enjoy your last day of the year of 2025 and welcome 2026. Thank you.
Right. Mornings, guys. Thank you, Megan, for the midweek futures update. So let's start off with the Hang Seng Index future as usual. What we do see here right now is that as we're approaching the year-end closing today, is the 31st of December, and Hong Kong, as well as the US, is going to have a half-day trading, right? And of course, everyone is looking forward what's the year-end closing of this benchmark index. And I think look for the past 1 month trend. The index has been undergoing a very strong counter trend rebound. However, the sentiments was affected by the military drill that are taking place at the Taiwan's straits right now, and that actually have caused a black candlestick on the Monday sessions. But however, on the Tuesday, right, once the sentiment has become calmer, right, we do see that the Hang Seng Index staged a very strong rebound, climbed above the 20 days moving average and heading towards the 50 days moving average right now. And so far, the Hang Seng has been hovering just be above 25,000 point level, showing that the overall setup remains bullish so far. right? And looking at the component stock of the Hang Seng, we are comfort to see that the 981 SMIC have staged a very strong rebound. You recall, I do mention that this rebound, right, could not be complete without the participations of the big tech company. So right now, SMIC have staged a very strong rebound together with the peers, 18, 110. Xiaomi. And also we look at the overall all the Hong Kong companies, right, in the stock heat map, right, comparatively, can see that UB Tech as well as the 9660, these two counters that involve in the robotics also stage a very strong rebound. Right, so I think that the sentiment have much improved compared with what we have seen in the month of November. Right, Hang Seng have a higher chance to close higher. Hopefully today, right, Hang Seng can move towards closer towards 26,500 point level. Okay, and as such, today, this morning, right, trading stocks. Firstly, I'll be looking at the Aluminium Corp, which deal with the 2600, which the counter have a break past 12 Hong Kong dollar, heading towards 13 and 14 Hong Kong dollar. And then on the downside, support is marked at 11 Hong Kong dollar. Secondly, I also see opportunity in this UB Tech Robotics 9880. On the back of a high volume, the counter have a break past 125, eyeing to test R1 at 135 and followed by R2 145. Also support at 115 level. Now, apart from these two counters, another counter that I'll be looking at which is the BYD, which have climbed above the 20 days moving average as well. So you can actually look out for next resistance at 100 and followed by 105, right? Downside support will be 95 and followed by the 92, right? And I think that the BYD have underwent a series of corrections, and at the beginning of this week, right, during this last week, when the Hong Kong market closed for a Christmas holiday, right, in the China market, the A shares, the investor have been buying on the BYD that list in the A shares, and right now in the Hong Kong market, the H shares follow through when the market reopened on the Monday. It have a strong gap up, and right now it's eyeing to test the 100 Hong Kong dollar level, right? So likelihood with the improve of the market sentiment, BYD if break past the 100, potentially could climb towards 105 and higher. Looking at the US market, I think much have been talking about the whether right now US market is at the high level, right? We look at the technical chart, right? S&P 500 is still in what we call technically bullish. So how do we define a stock or index, whether it's technical, bullish or bearish? We are using a very simple setup. 20 and 50 days moving average, especially the 50 days moving average. So you can see that right now the index is above the moving average line. So technically, we find that this is a bullish setup. Now, if we are looking for more evidence in the market, we can see that the US interest rate has been quite steady, right? The short-term interest rate is below the Fed rate of 3.75, and the long-term interest rate, right, the 10-year and 30 years is above the Fed rate. And right now, if we do a comparison between the 2-year and 10-year, right, there's actually a gap of at least 1%, right? This 1% gap, you can do an arbitrage trading. If you could, you can actually borrow the 2-year interest rate. You just pay about 3.5% costs and invest in a 30-year bond, which is a 4.83. This is actually quite a low risk of arbitrage opportunity. And because of this, right, the bond market shows us that the liquidity are ample, and the market is actually quite stable right now, right? And as such, I think that the with the bond market stable, right, it should actually give more confidence in the equities market, right? And um, so based on this, right, I do see that the US market do have room to move higher. Of course, the downside support we will mark at 6350, which is the low level that we've seen in the September month. So overnight, the market do have a bit of a profit taking, and another thing that I just want to share with you is that December month is not a bullish month for the US market. Usually, the US market will have a more bullish performance in the month of February and March. I'll remind you again on this bullish months, but just want to mention once again for December month, US market usually will have seen profit-taking mode. Um, so it's okay to see the US market to have a pullback in this December, which I'll be relook again at the US market when we move into the month of January. In the month of January, the US is going to have their earnings for the quarter four, right? And that's where the company is going to give their guidance for the full year of 2026, right? And that's where more opportunities will comes in the month of January for the US market. Having said that, we're looking at a few counters that I think SpaceX will continue to swing the market sentiment in the year of 2026, as well as a few big cap company such as Nvidia that recently they just acquired a company recently, right? We shall see how the share price perform again in the month of January, right? And let's move our attentions to the Malaysia market. FKRI, I do see that the technical remains bullish, right? Hopefully on the last day of 2025, our index could reach 1007. We're not very far from 1700 point, about 17 point. Let's see this afternoon between 3 to 5 p.m., right? How's the smart money going to trade our market? But on this at this juncture, I still feel optimistic on our market, and our stop loss will set at 1630. Now over here, I just also want to share with you a bit on the Malaysian market. Is that during the early month or the late November and early December, right? I have a lot of discussions with the fund managers that I support, right? Most of them are telling me that the market is not sexy. The growth is quite muted, right? And they're actually looking at the downside that the index will go lower. But I do want to highlight one thing is that seasonality effect actually plays a big role for our market, especially in the month of December, right? You look at this chart once again, right? This is a slide that in the month of August or September that I shared with you a lot of time, right? The purpose of this when I shared is that I'm quite confident that in the month of October and September, right, we do see corrections. Look at this pattern for the last 10 years. September month is always the weakest month, right? And without fail, right? I think only 2015 that September is a return with a positive gains. The rest of the month actually we do have corrections, right? And but December month likelihood and without fail, December month is a positive month. So with this seasonality chart, it just tells us that between September and November, right, this is actually opportunity for us to buy when there's a dip, and we shall add our positions, buy more when the December month actually move upwards. Now, essentially, right, you follow the patterns, right, somewhere in September, October, and November. If the market do have a corrections, that's where actually you pick up. And then when the December month rally happens, you add on your positions, That's how you do your scaling in the market with low risk, high return strategies, right? So I hope that with this seasonality chart, it gives you one of the idea is that market do have a season. Uh, there's a four season in our uh, weather, right? Market also do have a season. So moving forward, right, you look at the next month that we're moving in, January and February, right? Jan and Feb, there will be a corrections, and then there will be a rebound, right? There will be a corrections again and rebound again, right? So I think that with this December rally, right, hopefully we could extend the rally a bit into the first half of January, right? Then when the market is actually at a high level, that's where we remind ourselves to take profits in the month of Jan, and then we just prepare for corrections, and then we repositions again when we are moved into month of February, right? So I hope that for those of you who joined us so far, you do enjoy this rally in the month of December, which contributed by the strong performance of the bank sector, right? Also at this level, right? You look at our banks, the CIMB at this level about 8 ringgit, it still give about 6% dividends. I think that this dividends story is going to carry us into 2026. Into 2026, as we understand, interest rate is going to stay flat. Uh, uh, the chance of interest rate moving up is actually low. Hence, we do in 2026, it's better that we look for counters that can give consistent dividends. So apart from CIMB, another counters that I'll be looking at is a Leong Hub that have a buy call by Wei Xiang, right? Technically, you see Leong Hub is actually strong. Quite a lot of volume have been traded over here at about 64 cents. And right now, Leong Hub is testing the resistance at 75. A breakout, it will move towards 78 cents. Downside support right now is actually marked at 68 cents. The reason of one of the factor that I just want to remind everyone is that when the interest rate is actually going down, what you do see is that those company that generate cash, high cash company, high dividends company, eventually the PE will actually move on a higher level, right? Of course, right now, Leong Hub PE is still low, but hopefully, what's I experienced before in those days when interest rate is low will happen again, and we could see the stocks actually move on a high basis. Not There's no guarantee, but we just prepared what we see, and hopefully it pans out what we have prepared. Now, another counter that I think interesting is Gamuda. The shares have actually went down, and so far, you look at Adam's report, Gamuda managed to clinch the work order. And right now, they have actually accumulated quite a good size of order book that can keep them busy for the next few years down the road. At this level, Gamuda is eyeing to consolidate at around 5 ringgit. Downside support is 470, and on top, right, the resistance is 520 and followed by 540. Okay. As for the trading stock this morning, firstly, we have the IAB, which about to break past 1 ringgit and 13 cents. If breakout happened, IAB will be moving towards 1 ringgit 23 cents and followed by 1 ringgit and 30 cents. Downside support is 1 ringgit and 4 cents. Secondly, we have Lim Seong Hai Capital, LSH, that break past the 2 ringgit and 10 cents resistance, heading towards 2 ringgit 30 cents and followed by 2 ringgit 50 cents. Downside support is 1 ringgit and 90 cents. So we have one pending breakout IAB and followed by a breakout stocks Lim Seong Hai, right? I'll stop here and pass the stage to Iftaar. He's going to share with us on the initiation report on Sumisaujana.
Okay, all right. Thank you, Joseph. So I will be presenting a report on Sumisaujana. Let me just share my screen real quick. Okay, yeah. So we initiate coverage on Sumisaujana with a buy at 18 cent TP, which implies a 78% upside. So before we dive on to the investment thesis, let me just quickly explain on what Sumi does. So Sumi basically they manufacture drilling fluid chemicals for the upstream of oil and gas players. So what this simply means is that usually when you start drilling, you will find lots of muds in the sea, and also as you start drilling further, you will find not only oil but other substances, for example, water. So what Sumi does is they manufacture these chemicals to sort of reduce mudding, and as well as chemicals to allow oil and water to be mixed together, because as we know, oil and water, they don't mix together, and this will make it hard for drillers to drill into the sea further. Yeah, so this is what basically Sumi does. So there are, I would say, there are two main core investment thesis. The first one is the favorable cost structure. So Sumi's main cost components come from the purchase of fatty acids, and this takes up about 30 to 40% of their total purchases. So and these fatty acids are benchmarked against the likes of palm oil, soybean oil, and as well as canola oil. So meaning costs have been quite volatile throughout 9 months 25, and this is mainly due to the Trump's tariffs, and this is further worsened by the Middle East conflict. Because Sumi mainly they acquire their raw mats mainly from overseas, about 70 to 80%. So ocean freight costs have increased by 60% in just mere 8 weeks post sorry moving towards the Middle East conflict, and because of that, Sumisaujana's EBIT margin has dropped from high teens level and now to just barely single digits level in third Q. So, however, moving forward, as we see, ocean freight costs have come off by 45% post Middle East conflict. And as we know, we are also expecting a lower year-on-year palm oil prices and canola oil prices in 2026. So we believe that these two conditions would be favorable to Sumisaujana. And then the second main thesis, I would say, is their inception into new markets and new products. So Sumisaujana, they just marked its product into the US in the third Q. And even though this is only recognized as trading sales, management guided that the margins is at sustainable level. Moving forward, however, Sumisaujana is looking to finalize a JV with potential partners in the US by first Q26. So we are hoping for them to announce this JV sometimes in second Q or maybe in early third Q. So what this JV essentially brings is they are able to manufacture their products as their own. So now it will be recognized as manufacturing sales instead of trading sales, which will bring better margins. So in a medium term to long term, Sumisaujana is looking for the US to contribute 10 to 15% of their revenue. The second thing is in terms of new products, they have this new products. It's called bio-based products, and they have set up a MOU with Coolest Tea Group, and this will bring in about 4 to 5 million of revenue in the early stage, and this is supposed to kick off in 2020. Sorry, this is supposed to kick off in first Q 2026. However, and then this brings us to the valuation part of things. We use 11 times mid CY27. Okay, so first of all, we use mid CY27 is because even though we think 2026 to be a sort of recovery year for Sumi, but we remain conservative and we assume first Q26 to still have the lingering impact of US tariffs. And then second of all, the JV is only going to be finalized by first Q, and then the new products will also only start to kick in first Q. So we think we could only see a more meaningful contribution towards the second half of things. That's the first one. Secondly, when we look at the calendar for next year, we can see that there are two major festivities in first half, which are Chinese New Year and as well as Hari Raya Aidilfitri. So I think first half we could see a somewhat sluggish industrial activities, which could slow down demand for Sumi, which is why we packed our valuation from second half 26 onwards. So we used 11 times. I think this is justifiable, in line with KL Energy's index of 10 to 12 times. And if we look at Sumi's major customers, which are the likes of Baker Hughes, Halliburton, Schlumberger, these guys are trading a multiple of 13 to 18 times. So I think Sumi deserves to trade at a slight discount given these customers are very large market caps. Yeah. So I think even though the upside now looks very compelling, earnings so far have been quite disappointing for the first 9 months. So yeah, of course, we are expecting them to recover. But I think if the results are still bad for the next few quarters, our TP there's a quite a downside risk to our TP to maybe sort of a mid-teens kind of level. Yep. So I think I'll stop here, and thank you so much everyone. Happy trading, and I wish you all happy new year. Thank you.